Ladies and gentlemen, thank you for taking the time out to join us today. We will now start the press conference for NTT Data Group Corporation financial results for the full year ended March 2024. Let me introduce today's presenters. NTT Data Group Corporation Representative Director, President and Chief Executive Officer, Yo Honma. Senior Vice President, Head of Corporate Headquarters, Tadaoki Nishimura. Senior Vice President, Head of Finance Department and Corporate Headquarters, Kazuo Kakeya. I'm your facilitator, Ito, of Public Communication Department. Today's presentation consists two materials, financial results summary and a company presentation, which are available for download on our website under Investor section. Now, Mr. Honma will present the financial results for the year ended March 2024 and the forecast for the year ending in March 2025. Over to you, Mr. Honma.
Good afternoon, everyone. I am Honma from NTT Data Group. Firstly, thank you very much for taking your time to attend the earnings results briefing today. Now, here is today's agenda. Let me firstly take you through our results of the fiscal year ended March 2024. Please move to page 4. This outlines the results. Since Q3 of fiscal year 22, we have consolidated NTT Limited results. This impact, plus the FX benefit, helped increase net sales and operating income. Also, Japan and Europe businesses performed strongly, and together with other factors, it contributed to greater results. On the other hand, turning to net income, one of our growth businesses, the data center business spend increased, and the higher interest rate led to incremental financial expenses. In addition, more tax expenses reduced the year-on-year result, and we landed below the forecast. We plan to pay out a dividend of 23 yen per share as our original plan. I will explain details on each measure from next slide and onwards. Please move to slide 5. New orders received. Thanks to the limited consolidation and large wins in Japan and abroad, it marked a significant year-on-year increase of 2,065.4 billion yen. In the Japan segment, the enterprise unit experienced an year-on-year drop due to large deals in the previous fiscal year. However, the public business secured large projects for the central government and ministries, and financial business won a large deal for a financial institution, leading to incremental 201.5 billion yen. The non-Japan segment benefited from the limited consolidation and FX impact. Coupled with large wins in North America and other factors, the result was up by 1.8627 trillion yen. Please move to slide 6. Net sales. Net sales. North America scrutinized projects to ensure profitability. However, the limited consolidation and FX benefit, plus large business scales in Japan and Europe, helped deliver a substantial increase of 877.2 billion yen. Against the forecast, the FX benefit and larger Japan businesses and other factors helped us achieve an incremental 267.4 billion yen. Please move to slide 7. For operating income, costs for overseas business integration and structural transformation increased, which we had reflected. However, the limited consolidation and greater sales in Japan and abroad helped deliver a profit increase of 50.4 billion yen. Against the initial forecast at the beginning of the year, the FX impact and incremental sales in the public unit lifted profit. Therefore, the result was up by 17.6 billion yen. Please move to slide 8. This shows a breakdown of results in the overseas segment, but let me add some comments to EBITDA. Originally, the forecast at the start of the fiscal year had reflected business integration costs in the others of the overseas segment. However, the actuals were recorded in respective regions. North America was down, however, EBITDA without the impact of incremental overseas business integration costs was up year-on-year by 4.3 billion yen. MEIL spent more overseas business integration costs, however, greater sales lifted profit and delivered a year-on-year surplus of 7.7 billion yen. NTT Limited was helped by larger consolidated results and delivered an increase of 48.3 billion yen. Against the forecast, without the impact of overseas business integration costs, NA was up 2.3 billion and MEIL up by 5.2 billion yen. Please move to slide 9. Next, let me explain the progress of our midterm plan. Please move to slide 10. To achieve our objectives in the final fiscal year of the current midterm plan, or fiscal year 25, we have been working on these 5 strategies. By implementing these 5 strategies thoroughly, we have continuously delivered greater value for our clients and society. Let me take you through the progress by strategy of the midterm plan. Strategy 1. Cross-sector collaboration in Japan and cross-region collaborations outside Japan promoted initiatives to create new services, which has started to deliver results. In particular, collaborations with Limited play a big part, leading to over 130 billion yen of TCV in fiscal year 23. Also, many cross-region collaboration projects are taking place. In Q4, auto electronics supplier with factories across the globe awarded us to undertake the operational transformation project, which includes implementation of SAP S/4HANA. We will continue to enhance such synergetic projects through collaborations. Next, strategy 2. With foresight-oriented consulting to envision the future for clients and industries, we have been promoting initiatives to co-create value with our clients. So far, we have instilled our unique consulting method of foresight design method to increase consulting capabilities. One success case out of this effort is shown here. A business consulting project for a major food manufacturer. Based on future-oriented foresight of the industry, we have been discussing with the client's management team to deal with pricing, talent transformation, and other various business challenges as one team. Next, strategy 3 and 4. Strategy 3. Leveraging assets to deliver outcome. And strategy 4 is to accelerate adoption of advanced technologies in business. Let me share our efforts in advanced technology by taking an example with Gen AI. Co-creation projects using Gen AIs with clients exceed around 200 globally, while we are working on software development productivity improvement by adopting Gen AIs. This fiscal year, we will further focus on Gen AI, and through platforms, we will aim to provide value with advanced technologies for clients and society. Finally, Strategy 5, maximizing talent and organizational capabilities. Talent is a key asset for the company. And through various initiatives, we have been encouraging our people to have stronger sense as a member of NTT Data to ensure longer retention. One of great achievements includes a recognition as a top employer 2024 in 29 countries and 4 areas across the world. We are one of the 17 globally certified employers. Talent acquisition, career development, and DEI, or diversity, equity, and inclusion, across 3 categories, we have been highly rated. In order to be internally and externally perceived as an even more attractive company, we will continue to further accelerate our transformation. Next, sustainability-oriented business. Our effort in creating offerings have started to play out, and a service to visualize greenhouse gases called Sea Turtle has been adopted by over 1,000 companies and organizations since its launch in 2022. We have increased our lineup by product and industry and are successfully taking more orders in consulting services to help reduce greenhouse gas emissions. Based on a broader theme, including environment, human rights, and others, we have been pushing forward initiatives as one globally. Simultaneously, to enhance the function to manage and supervise from the leadership side, Sustainability Management Promotion Committee has been set up. Also, in response to the Zengin system failure in October 2023, the task force directly reporting to me, which overhauled system, was set up, comprising various experts from quality assurance, technology, and other departments. Under leadership of executive officers in charge of respective segments, 235 critical systems in total across the company, including subsidiaries, have been inspected. Going forward, we will continue this inspection from a third-party perspective and further enhance engineering capabilities, including platform talent development, so that we can build and operate more reliable systems. As such, we will continue to work as one NTT Data. Next, let me now turn to the forecast for the fiscal year ending March 2025. Please move to slide 18. Firstly, let me explain 2 basic assumptions. Breakdown of the segment for the overseas segment has been changed. To increase customer engagement and service capabilities globally, we have transitioned to a new global business operating model. Therefore, from the fiscal year ending March 2025, overseas disclosure breakdown will be changed as shown here. Also, the currency rate in the fiscal year 25 is forecasted to be at 138 yen and 150 yen against the US dollar and euro respectively. Please move to slide 19. This slide shows the forecast for the fiscal year ending March 2025. Year-on-year yen appreciation impact is expected. However, with larger businesses in Japan and abroad, we expect incremental sales and profits. As per net income, continued aggressive investment will increase financial expenses. However, incremental operating income is expected to grow profits. Also, the annual dividend per share forecast is to be up by 2 yen. Please move to page 20. This shows the forecast breakdown of the Japan segment. Net sales and operating income are expected to grow thanks to larger businesses across public and social infrastructure, financial and enterprise units. As for new orders received, it is expected to be affected by the larger deals in the previous fiscal year. However, business growth in each unit is expected to boost orders. Please move to slide 21. This shows the forecast breakdown of the overseas segment. For net sales, due to the year-on-year appreciation impact, a 130 billion yen decline is expected. However, driven by business growth in each business unit, we expect sales growth in real terms if we exclude such currency impact. For operating income, business combination cost increase is expected. However, the absence of structural transformation costs and the sales growth in real terms, we expect to record an increase. Actuals of the fiscal year ending March under new unit-based breakdown are planned to be shared from Q1 and onwards when the actual figures will become available. Now moving on to page 22. Now let me cover the progress of the business combination and structural transformation outside Japan. In fiscal year 23, we have executed all the planned initiatives, including the business structural transformation and combination steadily, which are almost on track. As per structural transformation, for the purpose of enhancing profitability, each region focused on shoring up digital capabilities and HR optimization up to fiscal year 23 intensively. To further increase profitability, our efforts will continue, and under the new operating model, we will shift to a stage to integrate business abroad at large. In the fiscal year 24 phase of the business combination abroad, a 30 yen spend is planned, and in the new operating model has already started, under which we will further promote business portfolio transformation to enhance our competitiveness. I have covered the fiscal year 24 forecast. However, let me take this opportunity to revisit our journey. We aspire to move on. Please move to slide 24. This shows the trend from fiscal year 19 when we started to target for the global third stage and our KPIs under the current midterm plan. Consolidated net sales, helped by solid performance in the Japan segment and limited consolidation impact, it grew to reach 4.37 trillion yen in fiscal year 23, surpassing the original target. In fiscal year 25, the final year of the current midterm plan, we will aim to further grow our business to mark 4.7 trillion yen level. For consolidated operating margin and EBITDA rate without temporary costs, our target remains unchanged at 10%. Customer base totaled 106 in fiscal year 23, and the fiscal year 25 target is 120 as planned. We have 2 more years to go, and to achieve these KPIs, we will work as one to work on these targets. Next, let me explain investment and financial strategies. Please move to slide 26. To drive business growth, our investment strategy continues to remain in 3 parts as the last fiscal year. To further enhance key technologies and industries through strategic investment, we will select and stay focused on specific key technologies such as Gen AI, while in the aspect of M&As, we will acquire businesses in key overseas markets as well as in Japan. The largest investment area is data center business, which I will explain details using the next slide. In face of vibrant demand, the data center business is positioned where growth can be expected. In fiscal year 23, 13 data centers were launched, and in sales, EBITDA, and EBITDA margin across all measures, those centers outperformed the full-year plan and stay on track. In fiscal year 24, we will continue to aggressively invest. Such investments to drive business growth are made with leverage, and a certain period is required to deliver returns. Therefore, ROIC and net debt EBITDA ratios are expected to be deteriorated temporarily. However, with a greater earning ability and DC assets off-balancing measures utilizing REIT as key pillars, we aim to restore better returns and ensure fiscal soundness. Finally, let me explain shareholders' returns. Our policy of shareholders' returns is a constant payout over mid to long term. And dividend per share forecast for fiscal year 24 is 25 yen. Going forward, with business investment and development technology, we will strive for growing profits so that we will be able to pay out more for our shareholders. This concludes my presentation. Thank you for listening.